So I think that we can start. So today we are going to handle RWA in 2026 from narrative to real adoption AMA session. Today we have three speakers. Uh, the first speaker, it is Melania, business development manager at PIPO. And we have another speaker. It is Michael from SHIFT RWA. He's a co-founder and president. And third speaker, it is Clément, CEO and co-founder of Office. Ophis, sorry. And I'll be glad to give a word to Melania, our first speaker. This is your words. Can you tell us more about you and what Piper is doing?
Yeah, sure. Hi, everyone. I'm Melania, and I handle business development at PIPO. Sorry, we are building the first regulated platform for issuing on-chain warrants on pre-IPO company shares, and I would like to explain in simple terms what this means in practice. Most people know DeFi as a space defined by tokens and yield. We offer something different. A real legally protected right to a stake in private companies before they go public. Um, here is how our model works. We select late stage private companies preparing for listing on Nasdaq or other exchanges. We structure an ERC20 warrant token issued under Regulation S, making it accessible to investors worldwide, excluding the US residents, of course. This warrant gives you the right to purchase shares at a fixed exercise price, strike price at the time of the IPO. If the market price at the time of listing exceeds your strike price, you basically profit from the difference. And since it's a warrant rather than the share itself, your cost is just a fraction of the share price, making it making the risk to reward ratio highly attractive indeed. You don't have to wait for the IPO though. Like you can also trade the warrant on PIPO's secondary market even before the listing. This basically means that the real price. This means real price discovery, real liquidity, and no asset lockup periods. When the IPO arrives, you can either convert the warrant into actual Nasdaq traded shares, or deposit into your own. Excuse me. Deposit to your own brokerage account, or sell it on the secondary market for USDC. Just. In short, we have created a regulated mechanism that moves from a private company through an on-chain instrument to a public offering with liquidity provided at every stage. This is precisely what didn't exist before PIPO. Essentially, we are doing something that hasn't been done before, and we are very proud of it. And without lockups and or massive buy-ins, you can trade better than with typical meme coins, for example. So yeah, that's about us.
Thank you so much for this interesting introduction. Here I would like to give the word to the Clément. Clément, can you hear us? Clément, can you hear us? You're muted. Seems like he has some technical issues. Okay. Yeah, I see that he's unmuted. Oh, okay. So let's give the word. Michael, can you hear us? Oh, I see the request. Seems like Clement has some technical issues. I see. Micah, yeah. Clement, can you hear us? Michael, can you hear us? Seems like they have some technical issues. Oh,
Okay, yeah, that's weird.
yeah. Very, very strange. Yeah. Yeah.
Can you hear me
Very,
now?
very strange. Yeah. Yeah.
Hi. Is it better?
Yeah. Even much
Yes.
better.
Okay, I don't know why that there were some issues. Like
Yeah.
speaking.
Can you hear me now? Very strange. Yeah.
I think it's just the day today.
Yeah.
Hi. Is it better?
Yeah.
Yes.
Even much better.
Okay, I don't know why that there were some issues. There is some delay.
Yeah.
Oh my god.
I think it's just the day today.
Yeah.
Hi. Is it better?
Yeah.
Yes.
Even much better. Yeah. It's very strange. Yeah. Absolutely. So. Yeah, Clement or Michael, do you hear us?
Yeah.
So yeah, you wanted a short
Yep.
introduction.
Yep.
So my name is Clément. I'm the founder of Ophis, which is a DEX aggregator, intent-based DEX aggregator. It's originally a fork of CoSwap, where I've added some layers on top of it for different kind of users, whether they are enterprises, institutionals, but also native for AI agents. As there's more and more AI agents bot trading today, and we recently crossed the numbers of interaction online with more AI agent interaction rather than human interaction. It will be in the next years probably the biggest the biggest market in DeFi. There will be definitely more AI agent trading than humans, and that's led me to create this platform for AI agents where they can simply add, sell, buy liquidity, whether it's from RWA or simply DeFi tokens, and could be simply managed by human as well, OTC desk, whatever. And yeah, that's pretty it.
Cool, cool. Very interesting. Just got overview your project. Quite impressive. Uh, yeah, and Clement. Do you hear us?
Yes, sure.
Yeah, okay. So,
But we cannot hear you.
yeah.
You can't hear me anymore.
No, Clement.
Yeah. Michael, can you hear us too? Because they both had problems this internet probably. Yeah.
But I mean, if you want to hear me from my Clément account, it's not working.
Michael, can you hear us? Yeah, seems like he has some technical issues. Okay, let's move on to the next question. In this case, yeah. So, guys, what do you think from narrative to real adoption? What actually changed in RWA industry in general? Like, in your opinion, Melania, what do you think about this?
Well, the honest, like, what I think, yeah, the honest testing isn't whether the RWA narrative got louder. It's whether the yield undermat it got more real, in my opinion. So the like the original DeFi model was closed loop. Protocols incentivized liquidity for inflows using tokens. Users farmed them and sold those tokens, and the entire system relied on speculative momentum and investor capital alone. What changed in 2026, in my opinion, is that real world assets now bring um, external yield from sources like treasury bonds, private credit, or pre IPO company shares directly onto rails people actually use. Those represent genuine cash flow, not unbacked printed tokens, for example. That's the difference between a narrative and adoption. A narrative, in my opinion, is a story about future value. Adoption is people transactioning against, yeah, against real external value today. So no, I don't believe we took like, yeah, that's what I think. That's my opinion.
Thank you, thank you, thank you. So, Clement, what do you think about this?
Yeah, I kind of agree. The fact that the numbers have doubled, DTCC and incumbents moved from pilots to production, regulation landed on three fronts. But adoption is a sex-matched volume in an on-chain costume. So the real test is whether assets are used as collateral in composable systems, and by that test, it's real but still early. So we can look at the numbers right now and see that it has quite massively increased, but we are still far from the greatest and massive adoption of it right now.
Yeah, yeah, that is true. That is true. But in general, yeah, market is not the same as it was in 2020, like 5 years ago. Yeah. Okay. Michael, can you hear us or still not? Yeah. Okay. Okay. Let's move to the next question. What does the real adoption look like on chain in practice? What do you think, Melania?
A few years ago, the RWA market simply didn't exist. So yeah, so pre-IPO exposure was locked behind the minimum ticket in hundreds of thousands of dollars, multi-year lockups, and access limited to small cycle of accredited US investors, insiders actually more like than investors to be exact. Today, a non-US investor can get exposure with a fraction of that capital, exit whatever they want on our secondary market, and verify on chain what the warrant is January backed. That's the difference between the narrative and the adoption, in my opinion, because it's already happening. It's not that people are talking about pre-IP on chain. It's is that they are actually doing it. So yeah, that's briefly what I think about this question.
Thank you. Thank you so much. Clement, what do you think here? Yeah, Clement, can you hear us?
Yes, sorry, my bad. I self-muted myself.
Okay. No worries.
So it felt weird. So yeah, what I was saying is like, to me, that there is different, at least three different ways to see it. And the real adoption is user doing so basic thing like hold it, using it, and exiting it. So concretely, today you can hold a tokenized T-bill, fund it in your own wallet, earning treasury yield, post it as a collateral in, let's say, Aave or Morpho, and then exit it. Exit the position into a stable coin or tokenized stock. At any moment of the day and pretty much any time during the year. And 1 year ago, tokenized treasuries they used to sit part inside issuer whitelist, so you could hold them, but nothing else. And right now it's going to change like massively, with Uniswap, the new Uniswap pools, recently Vanex V-bill accepted as collateral. So yeah, it's there are material proof right now of what's possible, and it's quite impressive to see.
Thank you. Thank you for the answer. And we move to the next question. So there are project spotlights, and here I would like to dive deep more about the PIPO and what we're exactly doing. So, like pre-IPO equity, has no natural home in DeFi, because it more on the bridge between stock market and Web3 market. So it's, let's say, complicated. And how does PIPO changes that? What actually look like when the tokenized pre-IPO warrant, which will be listed on Nasdaq or any other exchange, start trading on chain? What's going on there? Melania, can you elaborate here?
Yeah, sure. So, yeah, pre-IPO shares represent the most liquid and inaccessible segment of global capital markets. Minimum investment amounts run into thousands, like hundreds of thousands of dollars, and lockup periods last for years. So yeah, that's a long period. Access to such deals is typically limited to selected group of insiders, and this is precisely the problem we are solving in PIPO. How the platform works, I can give you an explanation, like a clear one about how we actually do stuff. So we identify a deal, say a Series D company preparing for a Nasdaq listing, and issue an ERC-20 token warrant in compliance with Regulation S. This means that the asset is available to non-US investors from day one. Such a warrant guarantees the right to purchase shares at a fixed strike price at the time of the IPO. If the market price at the IPO exceeds your strike price, your profit will you basically will profit from the difference. Crucially, you don't have to hold the asset until the IPO itself. It can be also sold on the PIPO secondary market even before the listing itself. In this way, we are bringing a new asset class to the DeFi space, one of which no secondary market previously exists, actually. We are not merely improving an existing solution, we are basically creating liquidity where there was none before. I hope that was clear.
Yeah, yeah. That is true. That is true. That it's something new, new system that haven't worked previously. Yeah. Okay. So the next question to the office. What's the gap that you closing? Like, every RWA project claims to solve the last mile between tokenized assets and actual DeFi usage. What specific gap is Ophis built to close? Who's using it today, and what does the next 6 months of traction looks like?
Yeah, so the gap we are closing is this is a very broad question. So right now you have like pretty much everyone solving issuance, but not so many companies solving execution. So tokenized assets today, they trade within like very thin liquidity, and it's fragmented across chains, venues. This is the main key points. The price discovery happens off chain. And now the real price of tokenized actions, shares, sorry, on Apple is on Nasdaq, not in a pool. So AMMs are, by definition, the wrong market for that. It's the wrong market structure. It's built for asset whose price is discovered in the pool itself. So what RWAs need is a competitive code-driven execution with MEV protection. Basically, very basic. Someone quoting you in the Nasdaq price on chain, competing in the meantime to give you the best feel. So in other words, you got the price from the Nasdaq, but it appears also on chain, and then it's the way you can guess you can get the best quote for that. So that's exactly how an intent-based batch auction work. A user signs an outcome, but not the root itself, not like on a DEX. Sorry. Then you have solvers and market makers that compete to fill the batch auction and referencing the liquidity on chain or off chain. And then after, well, it's just the best price that wins, and give you obviously the best price for what you ask. And in the meantime, slippage, we call it surplus, but slippage, it goes back to the users in full. It's not shared by it's not shared with us or with anyone else, so you get back full of your slippage. And in the meantime, we have like different kind of model fees for institutional grades, enterprises, etc., etc. Then you have another gap, which is the agents, as I was talking earlier. They need a better way to execute on-chain rather than having to deal with a front-end UI made for human. That's why we have an SDK plus an MCP and skills. For example, you can plug it directly on Cloud, for example, or OpenCloud or whatsoever. And yeah, that's pretty much. Regarding the next, I mean, the next 6 months, it's mostly we are mostly on the growth and the scale side. Office is really new right now. It's like 1 month old, but the structure itself is way more older. And now the biggest challenge is to find the best way to onboard AI agents, but also institutionals to either sell their liquidity or find liquidity on chain at the best price. Yeah.
Thank you so much. Were impressive, and I hopefully that you guys will do the best. You will provide the best solution for the market, and users will get exactly what they wanted. So I want to move to the our last part. Is still TradeFi wearing a DeFi costume? Like, where does the centralization actually live, and what you each building uh, for the for the market? Like, is your product decentralized or centralized, and how do you see how it works in your solution? Melania.
Both, like centralized and decentralized in the same time. Let me be clear, like yes, real world assets on the blockchain are more centralized than just pure DeFi. If you want to hold a legally protected right to shares in a real company, there must be a legal entity backing the asset. Like, that's completely normal. And yeah, KYC procedures are required because securities regulations mandate them. A custodian is needed to hold the underlying assets and all those. Like, however, I would like to challenge the very premise of this question here, because decentralization, in my opinion, is not binary. The question is not whether a system is decentralized, but rather where the need for trust is minimized and where it remains necessary. In PIPO, the functions that require trust are centralized. The company the company serves as the legal guarantor, custodian, and issuer. At the same time, settlement, secondary trading, transfer rules, and proof of reserves take place on the blockchain, all of which are transparent and open to verification and auditing by anyone. Basically, yeah, in our case, you don't have to take our word for granted. you can verify like the process directly on the blockchain. So that's the true RWA model, in my opinion. Like centralization where the law requires it, and decentralization where technology allows it.
Yeah, yeah, absolutely true. And Clement, the same
Yeah.
question for you. What do you think here?
So to answer your main question, so it's partly yes for us, and that's pretty much it. If you look at the asset layer of RWA, it's centralized by constructions. So a tokenized treasury it's a legal claim that someone has to custody the T-bills, run the transfer agent, and enforce all that claim. And there are like freeze functions, for example. You can see the same thing with the biggest stablecoin issuers, for example. It works the same way. And most tokenized stocks, they give you the price exposure, not the shareholder rights. And to my extent, pretending otherwise is how people get burned. We just watch pre-IPO tokens get sold through major platforms where the underlying shares were never delivered, and no insurance and redemptions are not decentralized. And I'm comfortable to admit that. So like regarding ourselves, regarding Ophis, it's some kind of a third layer. We hold ourselves to it. It's a solver competition that any kind of solver can participate in, or market maker. Settlement is on Ethereum, and even our off-chain components, our own order books, they run on decentralized infrastructure on Aleph Cloud, which is a decentralized cloud provider. So yeah, assets, they are TradFi, and the rails are on the decentralization part.
Yeah, yeah, that's true. That's true. And I hopefully that this AMA session was interesting to our listeners, and I really appreciate to the office, you Clement especially, that you joined our AMA session, and Melania. Uh, I hopefully that in the future we'll make more AMA sessions, even better than this one. And yeah, just want to say thank you all to joining this AMA session, and wish you great weekends. It was pleasure to speak with you guys.
Well, thanks for having me. Thanks a lot.
Thanks, Clément. I really appreciate it, and yeah, I hope to speak with you to some other AMAs if you have the chance.
Sure. Well, thank you, Roman. Thank you, Melania.
Thank you so much. Bye.